Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. In today's video, we're going to be talking about a topic that I've been putting off for, I guess, over a month at this point, since election day. Today, we're going to be talking about weed stocks. And weed stocks have been something that I've always kind of followed since my investing journey began 2 years ago, because I thought it was really interesting hopping on Robinhood and seeing that you could invest in legal weed stocks. And that just kind of blew me away. And so we've seen some things in the past month that has probably made a lot of people consider buying into weed stocks. Yesterday, a lot of the weed stocks were up around 10% after the UN voted to remove cannabis from being a Schedule IV drug, meaning that it was allowed for medicinal use but not recreational. And then with the last election in November, we are now up to 15 states where weed is completely legal, including Oregon, where I live. And now there are 36 states where it's legal for medicinal purposes. And in that last election, we saw a couple states with New Jersey, Arizona, South Dakota, and Montana that all legalized recreational weed. We're starting to see more states where weed is becoming decriminalized and in some places being fully legal. So that begs the question, is it time to start investing in weed? Is it something safe? And that's what we're going to be talking about in today's video. Our neighbors to the north in Canada legalized weed for the entire country back in 2018. And now we're seeing more and more states getting on board and legalizing weed in their state. So that begs the question, is it worth buying into weed and cannabis stocks going into 2021? We're going to talk about it in today's video. So I'm going to be talking about some individual weed stocks. I'm going to be talking about some problems and trends that we've been seeing with the overall industry. And then I'm going to wrap up the video giving my two stocks that I would consider buying when it comes to weed stocks, because there's a lot of them out there, but there's only two of them that I would really consider buying going into 2021 and beyond. So before we get started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it. Hit the like and subscribe button, as it would help my channel out a lot. Also, let me know what stocks you guys would like me to go over in future episodes in the comment section down below. So since the cannabis industry has become legal in a lot of states, it has been exploding. In 2019, there was between $11 and $13 billion in retail sales for medicinal and recreational weed. That's expected to grow by 40% in 2020, and the industry is expected to have sales of $25 billion in 2024. So weed stocks have been traded for like the entirety that I've been investing in the stock market, but the problem is many of them have not done very well. The only stock that I've bought since I've been investing in the stock market that has to do with weed, ticker symbol MJ, which is the weed ETF, and I'm going to talk about that later in the video, but a lot of these companies have really struggled in the past couple years, so I kind of wanted to break down some of the problems that we've been seeing with the industry and talk about some of the trends that may be looking like it's becoming a better investment opportunity. First, I want to talk about Canada, because that's where a lot of the problems really originated. One of the first problems that we really saw in Canada had to do with supply problems. And so weed was legalized in late 2018, and then the Canadian government was not very quick on allowing a lot of these companies to open up shop. In some places, it took months, up to more than a year, for some of these companies to start growing and being able to sell these products. This led to some companies like CannTrust to grow in 5 unlicensed rooms from October 2018 to March 2019, and the CEO knew about it and did nothing and got fired, and then there were some major fines that got put onto the company, and it has not been doing very well. So the supply is starting to come back in Canada, and we're seeing record sales numbers, and that seems like a good thing, right? We're not actually seeing that many great things coming out of Canada. So 2020 has been tough for these stocks for a couple of reasons, and one of the main ones has been competition. As companies have seen this weed industry as like a gold rush, there's so many different companies that are trying to get involved with it and try to get a piece of this booming industry that's expected to grow by 40% in this year and up to $25 billion in 2024. And whenever you see a lot of competition, it usually leads to razor thin margins and really tough losses for the companies that are trying to expand aggressively but are not making as much money as if there were only a couple companies in this sector. So for example, Cronos, ticker symbol CRON, posted $10 million in quarterly sales, but posted an operating loss of $35 million. And then the company Organigram, ticker OGI, had $18 million in net sales and was down from $25 million a year ago and posted an operating loss of $100 million. So we're starting to see some improvements with the Canadian market. In addition to the supply problem, they also had a really big dispensary problem. I remember at the beginning of this year, I talked about Aurora Cannabis and talked about how there was more dispensaries within the county that I lived in Oregon compared to the entirety of the province of Alberta, which had significantly more people in it. And so I saw an article talking about Canada has hit dispensary numbers. They finally hit 1,000 total. But looking it up, currently the state of Oregon, which I live in, has 700, which accounts for the highest number of dispensaries per 1,000 people in the US. When you look at Toronto, which has around 3 million people, they have 3.8 dispensaries per 1,000 people, and Oregon is sitting at 16.5. but it is getting better. And so Canada has had a problem with supply. The demand has always been high, but they've had problems with supply, the regulation problems, and the fact that there just aren't that many dispensaries out there. And a lot of these companies that I've mentioned are seeing increases in sales, but their margins are getting so razor thin that they're posting larger and larger losses, which means they're going to need more financing, which has become a huge problem for them. All right, now let's talk about the US, because as I mentioned, more and more states are starting to legalize weed overall, and we're starting to see a boom when it comes to that. But similar to how Canada is having razor thin margins, so is the US, but it's for slightly different reasons. It's not mainly because of competition, it's mainly because of the incredibly high taxes that the government is putting on these products. In some places, like Illinois, taxes on weed are around 40% overall. And here's a chart of some of the weed taxes in a variety of US states, and Portland, Oregon, where I live. And a major problem with these high taxes is the fact that these businesses, it's creating lower margins for them, and it's increasing the price for the overall product that's being pushed to consumers. And whenever you have a really high taxes on a product that people can get elsewhere for significantly cheaper, you usually get a black market. And that is what we're seeing across many of the states where weed has become legalized. So for example, in 2019, Californians spent $3.1 billion on legal weed, but the problem is that they spent almost $9 billion on illegal weed. For people that have options for buying cheaper weed, most of the time they're going to take that. And so in states where weed has become legalized, they're losing out on so much money because the taxes are so high, it's allowing these black market, behind the scenes weed sales to go on and become a significantly more profitable business than these the legal means of selling it. And it's becoming a huge problem. But the area that's really hurting a lot of these dispensaries and this business so much has to do with the US and the way that banks are run. And while weed is legal in Oregon, for anyone that's been in one of these dispensaries before, you'll know that they only take cash. And the reason behind that is because weed is still federally illegal and it's considered a Schedule I drug. A Schedule I drug is defined as a drug with no currently accepted medical use and high potential for abuse, which is one of the worst definitions or the worst way to describe weed that I've ever heard. It definitely has medicinal uses, and compared to a lot of the other drugs, it's not very addictive at all. Especially considering another one of the drugs that's in the Schedule I is heroin. So heroin and weed are considered the same type of drug when it comes to the federal government, which is just absolutely ridiculous that we're still talking about these two in similar lights in 2020. And so since it is federally illegal for people like me that are going to be working in an organization that's mainly funded by the federal government that can be legally drug tested still, even though weed is legal in Oregon, I can still get drug tested for weed, and that's preventing a lot of people and a lot of businesses from making more money. But the main problem with weed being federally illegal is it makes it really tough for dispensaries to get financial help from banks, because banks are run and operated under federal law, which means that they're not able to help with companies that are selling weed because it is illegal federally, and since they're getting so much assistance from the federal government, that just doesn't fly. And so without access to banking, it cripples many crucial services that these small businesses need. They don't have payroll, credit, or checking accounts, and no lending opportunities to expand their businesses. Also, it means that they have to pay their employees in cash, and it just makes life so much more difficult for these companies that are running a legal business when it comes to the state. But since it's federally illegal, the amount of banking options that they have are so limited. Yes, you can have some of these regional banks, but they don't have some of the lending opportunities than you would have with one of these major banking companies. So currently there is some legislation going through that's trying to fix this and make it legal for banks to help out these dispensaries. You have the Secure and Fair Enforcement Banking Act of 2019, or the SAFE Banking Act, which was passed by the House, but it still has not made its way through the government fully. And when you look at the reasons why, the head of the Senate's Banking Committee is led by Mike Crapo of Idaho. And when I put back up that map of where weed is legal and where it's not, Idaho, it is still fully illegal, and that makes a lot of sense. Could a new banking committee help this out? Potentially. One of the main problems is since it has to go through the Senate still, unless the Democrats win both of the runoffs in Georgia to make it 50-50, I think it's very unlikely for this to go through. And so at this point, weed is in a better spot than it was a year ago, and much better than it was in 2 years. But at this point, we still have some government regulations that are making it very difficult for this business to succeed. Also, some of these companies are not the most trustworthy. You can just look up all these weed stocks, and there's a lot of different scandals that's affecting a lot of them. You have Canopy Growth, ticker symbol CGC, which reported incorrect earnings back in 2019, where they reported a significantly lower net loss than it really was. Kushco in early 2019 had a very bad accounting error. And then there was a massive conflict of interest between Aphria, where their CEO grossly overpaid for Latin American assets for the company that resulted in the CEO stepping down. So when you look at all these weed stocks, there's just such a wide variety of companies and the financial backing that they have. You have stuff like Tilray, which has been a company that I've actually traded in the past. On one of these days where I believe it opened up at $80 a share, went up to 300, close to 200. I made 100% profit on that day, and it was one of my favorite days trading in the stock market. But at this point, Tilray is down significantly from that point, and I would probably stay as far away from it as possible. Then you have Aurora Cannabis, which was one of the most popular weed stocks on Robinhood, and was one of the first videos that I made that reached over 1,000 views at the beginning of this year. You have Canopy Growth, which I mentioned the problems. And then you have Altria, which is ticker symbol MO, which mainly does stuff with tobacco, but now they're starting to invest more into weed products, and it diversifies their portfolio a little bit. But when you put together a struggling business with tobacco with another struggling business of weed stocks, you got some problems. And so not the best option out there. And now I want to talk about the only two weed stocks that I would ever consider buying at this point. If you've been around this channel for a bit, I've talked about healthcare stocks before, and the reason why I like to buy ETFs for healthcare instead of trying to buy individual ones, especially when people were asking me to talk about stocks that would do well if their vaccine was approved, I've always said that I think it'd be better to take a stock or an ETF that averages out all of the healthcare stocks instead of trying to pick one, because when you only pick one, it's a law of large numbers. When you're picking one, sure, it can double your money in a couple days, but it also has the possibility of going down to $0. And when you have more stocks that are getting piled into an ETF, it's less likely that you're going to lose a significant amount of your money, though it does limit your upside potential. And the stock that I would buy if I thought that weed stocks are in a great spot going forward would be MJ, which is the weed ETF, which is currently trading for $15.74, and it is down 8% on the year. It does have a dividend yield of 4.6%, and I will show MJ charted compared to all the other weed stocks, and you can see that some of them are up like 60%, some of them are down 50%. And when you average them out, you do get MJ, which is smack dab in the middle, which is still down on the year. But I like this more than just picking an individual stock. A lot of these companies have had so many individual problems, and the likelihood of picking one that does well, sure, you could call it 50%, but I would rather pick a stock that has a likelihood of doing better than a chance of going completely towards zero. So MJ is one of my favorite stocks when it comes to the weed stocks. It's going to limit your upside potential, but it lowers your overall risk. And then the other stock I would consider looking at is Innovative Industrial Properties, which is ticker symbol IIPR. This is an REIT, which I didn't know that they had any weed REITs, which is a real estate investment trust. And one of the main things with REITs is that there are specific laws in place that makes it so that a certain amount of the profit has to be paid out to shareholders in dividends. So I've talked about NRZ, which was a REIT that had a 12% dividend until it crashed when mortgage rates went towards zero. But IIPR, unlike a lot of these other REITs that have been relatively flat, it jumped 32% in November. And when I show the chart right here, it has a safer looking chart than most of the other weed stocks that we've talked about. It actually looks like a normal stock. They had revenue jump of 197% in the last year, and they've increased their dividend significantly. As I mentioned, since it is an REIT, it has to pay out most of their profit in the form of a dividend. So their last dividend paid out was $1.17 a share, and that gives a dividend yield of around 3.5%, in addition to it being up over 100% on the year. So I love the fact that it's an REIT that pays out a dividend. Even when you have a stock that's not doing as well, the fact that they're required by law to pay out a certain amount of their profit as a dividend gives me a little bit of stability, even though this is a market that has a lot of volatility. So the only two stocks I would really consider are IIPR and MJ, just because it lowers your overall risk. And since this is an industry that could continue to increase over time, you're still going to have that upside potential, but it doesn't have as much of a risk of your investment going towards zero. So I think the weed stocks definitely in a better spot than they were a year ago, 2 years ago, but they're still not smooth sailing at this point. I kind of compare this similar to how I was very hesitant to invest into something like an Uber or a Lyft, just because when you have government regulations in between a company succeeding and failing, that's kind of out of the control of the company. And so until we have some of these help, the assistance with the Banking Act that goes through in the US, you lower some of the taxes, a lot of these margins are going to be razor thin, and I expect a lot of these companies to keep posting larger and larger losses. So that's why I think IIPR and MJ are better opportunities, but I'm very curious to see what you guys have to say about weed stocks overall, because it is a very interesting area. It's a way that could make a lot of money, but it's also a way that you could lose a lot of money. And this is not the type of industry that I want to invest in, especially when I'm up significantly in 2020, and I'm trying to keep that going into 2021, and this is just too much risk that I'm willing to take on. So MJ and IIPR are the only two stocks I would consider from this list, but let me know what you thought of my analysis of the weed stocks, and let me know what you think is the biggest factor for a bullish or a bearish case about weed. So thanks for watching. I appreciate all the support, and I will see you tomorrow.